Hey, hello, welcome back to my channel Stocks Babu. On 13th November, HEG Ltd has announced their quarterly reports, and let's check it out how they performed for this quarter. And here all the figures were given in crores, so there is no need to worry about the conversion part. And to begin with, the total revenue from operations for September 2024, they made 567 crores, whereas for June 571 crores. And last year, September 2023, the revenue from operations made by the company is 614 crores. So here clearly year on year and quarter on quarter, the revenue from operations has been declined. There is a fall of nearly 7.6% year on year to 567 crores, primarily due to global pressure on graphite electrodes pressures and subdued demand. Subsequently, the revenue also declined marginally from 571 crores. And when it comes to the total expenses made by the company for September 2024 is 528 crores and for June 588 crores. And last year, September 2023, the total expenses incurred by the company is 559 crores. So here, year on year and quarter, the expenses were declined. And this is completely with respect to the revenues from operations. How the revenues has been declined in the same way, the expenses were also declined. And when it comes to the net profit for the period or PAT, they made 82.28 crores for September and for June 23.05 crores. Whereas last year September, the net profit is 95.83 crores. So here, year on year, we can see a decline in the net profit, but quarter on quarter, we can see a huge increase. And the net profit surged significantly to 82 crores compared to 23 crores FY24. This increase is attribute to improved operational efficiency and cost management and higher other incomes of nearly 42.95 crores. And when it comes to the operational cost, the total expenses dropped to 528 crores, down from 558 crores year on year. Key contributions include lower raw materials and slightly reduced power and fuel expenses. However, depreciation rose to 47 crores due to recent investments. And these are some few updates regarding the operating cost for this company in this quarter. And when it comes to the earnings per share, they made nearly 4.26 for September 2024 and for June 1.19. And last year, September, the diluted EPS is 4.97. So here, clearly, year on year, we can see a decline in the earnings per share, but quarter on quarter, we can see a huge increase. And when it comes to the industry dynamics, the global steel production declined as an oversupply of graphite electrodes from China weighed heavily on demand and pricing. However, the India shows resilient with steel production growth, offering medium-term optimum for HEG. And when it comes to the outlook, while new-term challenges persist due to weak electrode prices, the ongoing shift towards electric arc furnace, we call it at EAF, steel making globally is expected to drive demand for graphite rods in the long term. Overall, the HEG performance reflects its ability to mitigate revenue pressures through strategic cost management and effectively improvements. The company remains positive to benefit from industry trends favoring EAF adoption in steel making. Overall, for this quarter, we can see pretty good results for quarter on quarter basis, but year on year, there is a slight decline. And this is all about HEG Limited. Thank you.